Hi guys, good afternoon and welcome to Money Control. I'm Karunya Rao. With me is Manisha Gupta, and today we discuss what's happening in the palm oil space. The commodity has given up 50% from its highs that it saw earlier this year. What happened?
Well, yes, it has been one side sell-off. Remember in the month of April when Indonesia banned export of palm oil because the country did not have enough and we were looking at higher prices. That is the time you saw a multi-year high come in case of the palm oil prices, and the prices hit highs at around 7,000 plus as well. But we are just about holding 3,200 right now. So that's more than a 50% of a decline that we've seen in palm oil. One, Indonesia not only opened its exports first partially and then truly, and then Indonesia also is looking at very high excess supplies within the country and they need to rush it out of the country. So there are buyers into the market as well. The Indian space as well has a good amount of availability for edible oils, and Malaysia also seems to be pumping a lot of palm oil into the international markets. So all of that in total has brought the prices down. Even as we speak today, we've seen yet another 5% of a decline come in for prices.
But like you said, it's been a one-way decline that we've seen last 4-5 months. But are FMCG companies rejoicing already, or is it reason enough for them to cheer? Because a lot of them use palm oil as a raw material for soap making, even consumables to some extent. So talk to us about companies and how it's going to augur for them.
So, well, absolutely. FMCG companies, for them, one raw material and a major one has seen a very sharp price decline. But has that happened with the other raw materials? Maybe not. Is the reason there is a lot of conversation on how the edible oil prices have come off. Not just palm oil, but soybean is off by nearly 25% from its highs in this year. And so has been the case with sunflower, mustard oil, etc. But has that come in for retail markets, for you and me as consumers? It has not. Because the FMCG companies have not been able to pass it on to the retailers. What they say is that they would be doing it in due course, but because other raw material prices are still on the higher side. So what we see right now is that it does improve their profit margins or the bottom line, because there is one thing that has gone down considerably.
But earlier on in the year we were talking about all of these kinds of oils, and I remember you showing me one of these grocery apps where the prices were through the roof. So has none of that sort of gone back to even remotely normal levels? Are we still paying as high? I think 200 rupees a litre that you were showing me for sunflower oil, right? Is it still as high?
So it may have come down, but not considerably. We were paying 210, 220 per litre as well, but it has come to 170, 180 kind of levels, while the retail or the wholesale prices have come down to 130, 150 as well. So we still are paying on the higher side, and this is perhaps not brands across. This is some of the companies who have actually cut prices, and that is because the government had directed them to do that 3 times in last 3 months itself, that they have to bring prices down at least by 10 rupees to 12 rupees per litre, keep them uniform across the country and pass it on to retailers. Has that happened? The last couple of times hasn't. The first time maybe it did because it was immediate, but we haven't seen that happen in last couple of times.
And what about our domestic demand? How is it playing out?
Oh, pretty nicely. And as you entered into the final quarter of this year, October, November, December, Dhanteras, Diwali, is when you will see strong demand for food, strong demand for clothes, strong demand for edible oils. So all of that will be seeing. But having said that, there is good availability. The affordability is absolutely there. And what the street will be watching out also for is the kind of imports that we continue to see. That is going to be a bit of a pain, especially with the rupee hitting 82.
Yeah, absolutely. I mean, while yes, the prices have eased, but at the same time, dollar has also become more expensive. So we'll see net like how the math adds up. We'll know also as and when the FMCG companies start reporting their numbers, whether there has been a benefit of that and to what extent. But for now, definitely.
Yes, because we import 13 million tons of edible oil. We consume 25 million tons of it. So with this 13 million, which is nearly half of what we consume, all of that is coming in imported.
In dollar terms. So we'll have to see whether or not it's too early to rejoice, because finally we are paying for it in dollars, and how that has panned out we'll know in earnings commentaries, etc., which will start trickling in from next month onwards. But for today, all eyes on palm oil, and that's all from us. Thank you so much for tuning in.